Ladies and gentlemen, welcome to another edition of In the Pit with Lobo Tigre. Our victim of the day is Charles Funk. He's the CEO of a new exploration play in Canada called Heliostar Metals. Though this is put together from previously existing pieces. So Charles, why don't you go ahead and tell us a little bit about the company, what you're working on, and then I've got some questions for you.
All right, thank you for having me. Heliostar is a new company. We formed late last year through Red Star acquiring a private company that I was the president of. We've got a strong mixture of high quality projects, a strong management team, we're well funded, and we have a really tight share structure. So we'll spend a lot of time talking today about our flagship project. It's the Unga project in Alaska, 384,000 ounces at 13.8 grams, amazingly high grade. And I'll attempt to convince you today that there's a lot of upside that we'll be exploring there. So, new company, we're going to have our first results out next week. We just announced yesterday. So, lots of catalysts and an exciting portfolio with a new team.
Sorry, first drill results?
First drill results. So, we drilled 3,200 meters late last year. We've been a bit of a victim of the lab delays like a number of other groups. But that frustrating delay is coming to an end. We'll have our first results next week.
Okay, well, let's come back to that. Back to the story a little bit. It's why the merger? You were with Evrim. You went off and founded this private company. You picked up assets. Why the pivot to the north here? And what Sorry, go ahead and answer that one first, and then I have another question.
I'll drag you back a little bit further. So my background is mid-tier and major companies, Oz Minerals, Newcrest out of Australia for 10 or 12 years. And then I moved over to Vancouver and, as you said, worked as the VP of Exploration for Evrim. And, learned a lot about doing business in North America after previously having a lot of geological exposure to this part of the world. And so I wanted to form a company. And backed by a number of high net worth investors, we started Heliostar, a private company that was, we're fixated on projects that have a lot of potential and a high grade. That's sort of our sweet spot. And so we picked up some early stage projects in Mexico that we might get to talking about, but we're always looking for a flagship asset. I always claim that we started this in 2019 for authenticity. We did it before the gold price started moving. We genuinely wanted this kind of opportunity. We weren't just chasing markets. And we looked at a few projects. Some deals, the deal worked, but the project didn't, or vice versa. And we got started talking to Jacques Vaillancourt and the Red Star group early last year. And it worked out that we had a lot of synergies. They had an amazing project in Unga that just needs a lot of exploration to show its potential. We had a dynamic management team. We had an ability to raise money. Their share structure had got a little too far out. And we had a nice counterbalance with the projects in Mexico. So both groups agreed that it was worth combining. And so since then, that's where we've been doing the hard work that we talked on in the name change to Heliostar to recognise that change. We raised $7 million in August and built that management team. So that's kind of a
Sorry, let me jump in there, Charles. That leads to the second question. I was noticing, of course, one of the first things I look at is share structure. It's a good forensic, and it seems awfully tight for a company that has antecedents that have been around for a while. So I was wondering if that was a result of them buying into your private company and a tighter share structure there, or did they buy you and then there was a share rollback, or how did we get this tight share structure we have now?
Yeah, it's the latter. So they acquired us, and then as part of the deal terms, it was the consolidation. As you know, when you start the exploration through to resource, through to the development journey, you have to issue capital, or you have to raise capital and issue equity. So if you don't start with all the bullets in the gun, it gets hard. So we now have 31.6 million shares on issue. So we're in a very strong position to take the project forward, and that's how we got there.
All righty. Okay, so tell us about Unga then. I looked over the slides, so I have some specific questions. But you've got this high grade starter, and I'm sure you think of it as just a starter, 384,000 ounces. But I'm not seeing okay, here's the existing footprint, and here's three more just like it, that could multiply. What's the upside here? How do I How do I, as a potential investor, get my mind around how we can grow the resource here?
Yeah, so I think there's two things worth talking about for potential investors for the property. The first is not the geology at all. We're down in the Aleutian Islands, halfway sort of down the peninsula in Alaska. So we're fortunate. It's a remote project, but it's surprisingly accessible. There's a major airstrip on Sand Point, and there's regular commercial and charter flights to the property. And it comes with a real benefit that surprises people. When people think of Alaska, they think cold, frozen, short field seasons. We're completely the opposite. You know, we were drilling until the end of November last year, and we're going to remobilize in early March. In mid to late March. So we have effectively a 9-month field season. It's actually further south than the Golden Triangle in BC, which sort of surprises people geographically. And so it's worth spending a little bit of time on that because it's not your average Alaskan project. And then geologically, you know, if we went down I'm a geologist and I could bore you for hours. This is an amazing project. It's a 10 by 13 kilometre lithocap on Unga and another 5 by 5k zone on Popov, the two islands that make up the property. And there's porphyry targets, there's high sulfidation targets, there's vein targets. And so what we're targeting is we want to get to that first 1 million ounces and then show what it can be beyond that because there's significant growth potential. But you mentioned SH1. So SH1 is the most advanced prospect on the property. There's the 380,000 ounces at 13.8 grams. It's from surface. You know, it's a 2 to 15 metre wide true width vein, regularly sort of 5 to 10 metres wide. So that's pretty incredible when you think, you know, in the United States to have those grades at surface. It gets a little more amazing. The deepest hole drilled in is about 300 metres below surface. It's 5.5 metres at 24 grams. And that hole was drilled by Battle Mountain in the early 80s. So in nearly 40 years, this deposit has remained wide open to grow.
And why is that? What was there, fractured ownership, or why was this kept off the market and so underexplored for so long?
Yeah, you'll keep hearing me refer to this back to the 80s a couple of times. In tongue-in-cheek, I call it a time machine to the 80s, this project. It got lost in an oil and gas company for nearly 15 years throughout the 90s and early 2000s. And then when Red Star picked it up, you know, two things. One is their founding CEO sadly passed away of cancer, and so lost a bit of impetus there. But they're also focused in the Red Lake district in Ontario. So by the time they finally turned their attention to the Unga project, they did some good work in SH1 in sort of 16, 17, and Eric Sprott came on board as an investor at that point in time. But with the capital structure and sort of the market was pretty tough as well. We forget that it wasn't today's gold prices. It just sort of drifted, and we're the catalyst for sort of reviving it and coming back. So at SH1, we completed, if you look at our slide deck, SH1, there's a long section that shows the resource and the drilling. There's a core area that's quite well drilled and well constrained, and it's got holes in it like 24 metres at 17 grams, you know, really robust mineralisation. But outside of that, you know, there's a 100-metre gap between the surface and those first intercepts. And so we completed 7 holes there late last year. That needs to be tightened up for the resource confidence, and the first results that we're expecting next week will come from that zone. And then as you look down and out, all the drilling sort of 100 to 300 metre spaced, which is just completely sort of inappropriate for how you'd explore these epithermals, let alone your resource confidence. So we think that's a starter resource because it's open at depth. We think we can do that infill drilling and the expansion drilling. And so we'd like to believe that there's sort of 0.5 to 1 million ounces at SH1 before we move on to the other targets that make up the project.
You need to wave your arms more when you say that. 1 million ounces. Okay, so that's let me dig down in on it a little bit. It's interesting to hear you say the average width. That was one of my questions because I look at some of these on that same section. I think it's slide 7 on your presentation for the audience. I'm looking at that and I see 13 meters of 2.4 grams. So that doesn't look really great for underground mining. Within that, there's 60 centimeters of 9 grams. Okay, that's better, but it's only 60 centimeters. And there's some others like that, 9 meters of 2.5, and then within that there's a meter of high grade or higher grade. So is that just some areas, and is there a consistently mechanized mining width of good grade, or is it really it's broad but the higher grades are narrow within that? Help me characterize the mineralization here.
Yeah, so we talked about that main chute, that main raking zone, and that's consistently sort of 5 to 10 meters true width, quite robust. It's not a vein in the sense that you get wall rock, vein, and then wall rock like you can see in some epithermals. It is a corridor that's had multiple vents of brecciation and rebrecciation. So you go, increasing silica alteration, then ultimately becomes a formal vein, but where one person would call that might be 30 centimeters, a meter away from where the other person does it. And that's a good thing in terms of endowment, because it means long-lived, multiple episodes, putting more mineralization into the structure. The grade that we see is associated with a sort of a coxcomb quartz phase, and it has a coarse grain gold nature. And so it makes it more like an orogenic vein in gold distribution. And so, sometimes you're lucky enough to get the coarse grain gold go in the half that goes into the assay. Other times you're not. And so when it works well, you get those amazing, there's intercepts in it like 2 meters at 200 grams gold. And that's clearly where the nugget's going into the sample. And so what we look for as geologists is where there's a robust vein forming that we can step out on. And if you do the density of drilling, then on average, you'll get the confidence in the resource. And so that's why I talk about that coarse space drilling at depth. It's just too wide a spacing to have confidence. And so those two holes you mentioned, as you're right, 13 meters at 2.5 grams is good, but not an underground mineable width. But the fact that there's a really robust width vein there, and there is spikes of higher grade within that, tell us that it's a really productive system and it's open in that space. So I think let us do a whole series of drilling to tighten this up to 50 meter spacing, and we can have a lot more confidence on the grades, but the widths is clearly there, and that's one of the big attractions at SH1.
Okay, so just talking about the slide one more time, won't beat it to death, but there are the pink areas, which are the highest grade, the red areas, which are the next, and the yellow below that. It's your thought that closer space drilling will help either connect or define more of the pink areas? Is that what I'm hearing?
Yeah, so the pink areas represent the higher than 10 grams to make an audio version of the slide. Yes, we just need to increase confidence. You can see that there's coloured areas in that resource that have very little drilling. Just as equally, there's big white areas with no mineralisation. And that's just a factor of the lack of density of drilling. So our plans this year are the systematic infill and expansion drilling. And I think that'll A, increase the confidence, and B, has the potential to seriously increase the size of the resource.
Right. And you drilled last year a whole row. All of it, as far as I could tell, was all the near surface holes. Is there actually expression on surface, and can you connect a channel on surface with those holes and ones below and make all of that, turn all that waste into ore? Or what does that do for us?
Yeah, the short answer is yes, you can. It's an outcropping vein. So they're high impact holes, those shallow drilling. They needed to be done. It's always nice to start with shallow, high impact drilling, isn't it?
So I don't see any trenches on the surface or the topo here. Has trenching been done, or are you doing it? And you get a freebie, like a free drill hole right across the top of the vein there.
There has been historic work done. It's in terms of putting it into the resource and the standard of that work for putting in a resource. So I think at the moment our initial focus is include those infill holes and go to depth. But there's a cheap win in redoing that work. But we didn't want to be seen to be, we're not in the business of just reheating old projects like happens when gold markets come. We seriously believe in the upside, so we're stepping out with our drill targeting.
Well, I understand, and kudos for that. But if it hasn't been there, I mean, like I say, it's basically a free drill hole across the top of the thing. And if you're going to take the resource all the way up to surface, or maybe you don't want to, like if this is a place where it has to be underground mined, then it maybe doesn't matter what your crown pillar is, because you're going to leave it there anyway. Is that the case, or do you think you could actually open pit the top of it?
We haven't. So it's very common that you do a shallow slot pit on the top and then you go underground. From our perspective, I think we've got to do this year's worth of drilling and see what the overall resource looks like before we make a call on how we'd exploit this. Both options are available to us. So you're right, that work is work that we should and will do. And we'll look at that. I think at the end of the year, we can start to have the conversation about what's the most appropriate mining method as we move from resource into studies at SH1.
Okay, so we're looking here at SH1. We're looking at connecting the dots better, extensions at depth, and ironically, extensions upwards.
Yes.
But you have other targets too. Did you guys drill that hole at Aquila, or however you pronounce that?
Yeah,
or is that
yes.
Red Star?
No, we drilled. So, if you just had Unger, that's a great start. How many greater than 10 gram from surface resources are there in the United States? That would be a fantastic project. What really elevates Unger is we're going to talk about 4 targets:
Okay.
SH1, Aquila, Apollo, and Centennial. And the high probability nature of these targets and the size of the prize is what really separates Unger as an opportunity. So SH1 is one zone on the Shumigan vein. The Shumigan vein runs for over 8 kilometres, and there's a whole series of targets in between. But we went to Aquila, which is 6 kilometres to the southwest, because again, work that Battle Mountain did in the 80s. You can see in the plan map that there's rock chip samples between 6 and 30 grams over 850 metres. And geologically, there's a classic dilation zone forming. And that's where you form ore shoots in epithermals. And so Battle Mountain had done that surface work, they'd trenched it and got some good results. And they drilled it in the early 80s, but actually struggled for drill core recovery. Got very low core recoveries, particularly in the vein zones, less than 10%. But got some encouragement, and actually in their old report gold grades in the sludges. So you're like, this needs more work. Again, you've got to take the time machine from then till now. So last year I mentioned we drilled 3,200 metres. We drilled 23 holes and we hit our target in 19 of those 23 holes. The only assays we got back is from the first Aquila hole. And the reason we have Aquila back is we rushed it at the time hoping to get the results back in the field season to influence our step-out drilling. That's before we realised the extent of the lab delays. And that's why we have Aquila back, but we're waiting on those remaining 18 intercepts to come back.
So those remaining 18 are all at SH1, or are there more holes from Aquila that you're waiting for?
So there are 9 holes we completed in SH1. There are 5 holes we completed at Aquila, and the remaining holes were drilled at Apollo, Sitka, and Empire Ridge, which we'll get to. All
right. So 3.6 meters of 4.5 grams per ton isn't terribly exciting for underground mining. What did you learn from this, or why are you excited about that?
Yeah, so I sort of think of Aquila one. It's not a home run, but it's a pretty good start for what's effectively a 6-kilometre step out. So what we learnt is the vein has a different orientation to the way it was expected before. So we've hit the vein in 4 out of 5 holes. We've got that first hit of the 3.6 metres at 4.5 grams. We hit it underneath, we hit it along strike. We're waiting for those remaining assays. But we think with the gold-rich nature of the mineralisation, and I'll talk about why that matters in a second, that with the gold-rich nature, the wide open strike extent, the big footprint of gold mineralisation, that we're at the top of an ore shoot here. So we just need to systematically expand and work out there's parallel veins that we hit in the drilling as well. So just exploration, we all want to start with home runs in our first drill hole, but to find a vein that has grade and huge footprint to explore is exactly how you start to build these, and that's where we're at with Aquila.
All right, sure. It's not a bad start. I would not say that. But okay, did you figure out why did you learn anything and figure out why they had such bad core recovery? Was there busted up rock in there they didn't expect, or?
There's quartz veins and there's literally clay structures in between in quartz veins. So we suspect that's why why they had the poor trail with small diameter core as well. So we were ready. We had HQT core, which is the best to drill for better recovery. We had all the muds ready. We were even ready to triple tube if we had to. We were really planning for the worst. And actually, we were lucky. We got very good recovery, consistently over 90% core recovery.
Okay. All right, so to be continued.
Exactly. We'll follow up on that this year. It's hard to see what the upside could be, but these are exactly how you find. I've been fortunate enough to be involved in multiple epithermal discoveries, and they all start like this.
All right, so Apollo is a different beast. It's not in the same trend. It's polymetallic, or what's left is polymetallic. What are you hoping to deliver there? And
So Apollo is really interesting. Apollo was Alaska's first underground gold mine. It produced from the late 1880s to the 1920s. It produced about 130,000 ounces at 10 grams per tonne. So it was quite a profitable mine. And it's a friend of the family in terms of relative to SH1 and Aquila. So it's on a parallel vein to the south, the Apollo vein. Now I am waving my hands. It's about 5 kilometres south of SH1. And so the old timers really profitably recovered that 130,000 ounces. You can see again a long section on our presentation from quite a wide vein, a vein that gets up to 8 metres wide, and did very well out of that. But they didn't understand the intermediate sulfidation geological model. And so that is a model that very simply starts off gold rich at surface, becomes gold silver base metals, and then ultimately just base metals at depth. And all of the veins, Aquila, SH1 and Apollo, share that characteristic. But at SH1 and Aquila, you're way up in the gold zone still. So that's another reason why we have confidence on the depth potential. Whereas when you move to Apollo, you can see that's over 1,600 feet vertically. It's got a huge vertical range in that old section. And the advantage that we have, or the opportunity that exists for us, is the old timers didn't understand that model. So they were looking for more of what they called free milling gold, because they couldn't economically recover the gold with sulfide. They called that complex ore. So that's ore with galena, sphalerite, and probably silver sulfur salts as well. And so stamp mills in the early 20s, that wasn't a technology that could profitably recover that from the gold mineralization. In fact, there's some old reports they tested the con. They even got penalized for zinc. So it's funny how the gold turns over time.
That's a great story.
It's just a little one that made me smile as well. And so the opportunity for us is they sunk these shafts down. You see under the main Apollo in an area they call Shaft 2 and another area called Sitka. They sunk these shafts and did these exploration drives along looking for more gold. They didn't find the free milling gold, but the huge opportunity for us is they blocked out on 3 sides of the vein. They told you can see that it's 8 metres, 20 feet wide, they note, under Apollo. There's a 100,000 tonne block in Shaft 2 of sort of 3 to 4 metre wide material. And so the old timers have blocked out the ore on 3 sides. Then they've estimated the grade. They've said on average it's 3 grams gold, 250 grams silver, and 10% combined lead zinc. That's 8 to 10 gram gold equivalent material today. And from that day till this, no one has ever drilled under the workings, which is kind of incredible. I always say if this project was in Nevada, it would have had $50 million spent on it and probably be in production today. We started drilling, we're the first group to have drilled underneath those workings. So we drilled 3 holes under Apollo last year. The first hit the workings, the second got caught in a structure and deviated, but in the third hole we've hit 2 nice wide veins. We've also drilled 4 holes under Sitka and got a whole series of stockwork zones, veins and workings. So we know where the vein is now. It's real. In fact, that long section on that sort of old cartoon I refer to as a cartoon drawn in the 90s from a report in the 50s on a mine in the 20s. So there's a little bit of Chinese whispers to that, and you were never quite sure, plus or minus 50, 100 metres, maybe those locations were accurate. So today, while we're waiting for these results, we know where those vein intercepts are. They're real. And so we want to come back this year and systematically step out on those intercepts. And, I think there's probably another 0.5 to 1 million ounce target at Apollo Sitka, except this time it'll be gold equivalent, not pure gold.
Sure. I didn't see a pierce point in that long section, so I was wondering, did you drill in those blocks that are historic to try to confirm their existence, or did you just sort of assume those and drill underneath them to try to see how much bigger you can make it, or where did you put your pierce points?
Yeah, back to the first point. We drilled at the bottom of the workings and down. We're not interested in drilling where other people have mined. We want to understand where there's more mineralization. That's where we're going to make money. So, given that it was you've got to digitize it, you've got to estimate where things are. We had a few surface points to give us a bit more confidence. So we were really poking in the dark. We knew roughly where we wanted to be, but not precisely, and that's that mixed bag of results. But we want to drill in those blocked out ore zones that haven't been mined. That's where the potential exists in our perspective.
And I noticed that it mentions somewhere that this is all under sea level, and I'm wondering, is there a water issue there where there's a lot of busted up rock and a lot of flow of water there, and is that a problem, or is this something that can be mined without a freeze ring or expensive pumping? How does that work?
Again, we're probably a touch early on that. There's no evidence from the old mining that they had issues with water table when they went down and did that, so we're not expecting that to be an issue. Today, the mine is flooded. That's why we can't access the old workings. But our thoughts are, if we do a systematic drill program and we're starting to achieve our goals, then going underground and rehabilitating the old underground workings makes sense. But I think there's a program of drilling first, and then we'll look at those next steps from there. But no, we're not expecting a complicated underground scenario based on that old work.
Have you tried using an ROV? I've seen places where there's old flooded workings you can't get into, and they send a little submersible on a cable to go take pictures. And have you thought about that, or is it worth doing?
We actually had that discussion the other day on innovative ways that we could advance. We certainly hit the ground running when we did the deal. We moved 3 rigs to site immediately. Excuse me. We moved 3 rigs to site immediately and started drilling. I think we will look at a mixture of. I always say there's 2 things, and I got this question a lot with Wiesler when we made the Panuco discovery. Everyone wants the fanciest technology in the world. It's quite an old-fashioned thing to do, just to do the basic and obvious things that are in front of your nose. And so we like to have a mixture, and it's not sexy because markets love artificial intelligence, and they love the silver bullet.
But if you're drilling and you're hitting old workings where you're not expecting them, you're wasting time and money. Whereas if you can, if the tunnels are all collapsed and you can't get there, you can't get there. But if you can send a submersible out, you can map it, maybe save yourself some time and money by having a better idea where everything is.
You're absolutely right. That's why it came up in conversation. It's as I said, a mixture of basics and clever science. I think is a good way to do business. So we're looking at a couple of other a combination of geophysics and some drone work as well. So we're looking at a few clever ideas as well as the basics.
All right. And the next area is Centennial, at least on your presentation. That seems to be the other priority here. This is at surface, but I'm not sure if there's a town by that airport, but it's near the airport. So is that something you can even mine open pit there, or is that something that's okay? It's near surface, but that's just to start. It would be another underground project, or how? You tell me. What are you trying to do there?
So Centennial is a little bit of a variation on the theme that we talked about. So instead of being in a vertical vein, as you said, it's a flat-lying body of mineralization at surface. The fluids have come up the vein and then gone into a porous layer. It's road accessible from the town of Sandpoint. I think we're jumping the gun again to say how we'd exploit. It's pretty clear how you'd exploit the projects on Unga. You'd have, like all epithermal districts, a central processing plant with multiple feed sources from the different ore chutes. What gets our attention at Centennial is, again, back to the Battle Mountain work in the 80s. They discovered 200,000 ounces at 1.3 grams on surface. That's a historic resource, so it's not a compliant resource. And so we need to do a lot more exploration.
And sorry, that's all oxide?
It's all oxide. So they did metallurgical work that shows greater than 90% recovery in a heap leach scenario. So exactly what you'd want, basically 0 strip ratio. But I think we've got a few steps before we decide the best way to, 200,000 ounces is on the smaller side. We'd want to grow that larger. And one of the ways we think we could do that is you notice there's some high grade holes in it, sort of like 4.5 meters at 5 grams gold. And some geophysics done, a couple of IP lines done in 2016 suggests that they could be associated with a feeder zone. And so there has to be a feeder zone bringing that mineralisation up. And so our first target will be to look for that higher grade mineralisation, get a much better understanding. Again, it's 40 years since anyone did any work on Centennial, so we'll get up to speed before we decide what's the best way to proceed on Centennial.
All right. And so you didn't drill there in 2020, but you will this year?
Correct. Our plan was to drill there last year, but we actually put extra holes into Sitka and Aquila. So what we're doing is, it gets to the bigger picture and talks at more of a corporate level. We have $5.5 million in the bank today. And so we're going to spend $600,000 on our projects in Mexico, and we'll be back up in Unga in March. But because we're mobilizing in March, but we're still just starting to get results now, we've got two contingencies. The first contingency is approximately a $4 million program centered on SH1 and Apollo. But we're also working up a 10 to 20,000 meter drill program that'll be in the $10 to $12 million range. And we'll just wait to see what our results are. So we've got the full capability to press ahead under our own steam, and then depending on those results, we can react from there as well. So we're just making sure we're well organised as a management team, and then we'll choose the pathway so that there's no delays.
Understood. Okay, we've been talking for half an hour, so I don't want to make this too long, but we do want to talk a little bit about Mexico and what your priorities are there. And I guess that wasn't an accident that if you wed something in Alaska with projects in Mexico, you can work year-round. So what are the priorities there, and what would be the perhaps news flow or deliverables from Mexico?
Yeah, so very quickly, we've got 3 earlier stage projects in Mexico. So really attractive projects, and I'll just touch on a couple of them. So exactly as you said, when an investor invests in a company that has projects in Alaska or northern Canada, there's that sort of sell and forget mentality from October till March kind of thing. You've probably, lots of your subscribers, you might have even done it yourself. It's a normal way to trade those stocks. And so we have 2 clear differentiators that separate us from that, in that long field season gives us effectively year-round news flow from UNGA. The other is these earlier stage projects. I know Mexico extremely well. I've been fortunate enough to be involved in a number of discoveries in Mexico. We acquired these projects because we think they have a lot of potential.
Sorry, can I just ask, Charles, did you go straight to Mexico out of school? I mean, you look pretty young. You don't look old enough to have that many years of experience in Mexico or anywhere else. How did you get there?
How did I get to Mexico? Good question. No, the first 10 or 12 years I was in Southeast Asia, South America, Australia. I was lucky enough to get a job with Newcrest looking for new opportunities in the Americas, and got to spend time in Chile, Ecuador, Colombia, Nicaragua, visited Mexico a couple of times, Alaska and Canada. And Evrim was when I first started in Mexico, and the endowment and the opportunity there is quite significant. So I keep spending time in Mexico because I find it simple to find really interesting projects.
Okay, all right. So sorry, I just had to ask. Tell us what you're working on.
So we're going to drill our La Lola project, a vein that gets up to 40 meters wide, that we think is at a high level in the system. And as you go deeper, we'll get to the productive level. We'll put more information out on that in the next probably later in February. But I'll just touch on the other 2 just because really compelling surface results. Oso Negro has 3 veins that has consistent 200 gram to 2.5 kilo silver mineralization. It's never been drilled. So we're going to map and sample and work out the best drill targets at Oso Negro. And then the last one, I sort of call it my glass half full, glass half empty story. I was trying to put the Picacho district together because I like entire districts. If you're going to find big deposits, you want the whole footprint. And so we acquired the Kumaro project last year, but unfortunately I was trying to get the blocks around it to build the district and was comprehensively outbid by Silvercrest. So glass half empty, we don't own the whole district. Glass half full, we've got a key claim block in Silvercrest's next project, and we all know Silvercrest's great reputation in this part of the world. Eric and Rosie have done an amazing job in this part of Mexico.
I was wondering about how that fits into your strategy. Will you drill that this year to try to get them to do a deal with you, or what's the plan?
So our part of the ground's basically seeing no exploration. So there's veins that continue from Silvercrest ground right onto our ground, and there's also a down-thrown block in the east. So we're currently just organising our mapping and sampling for February and March, and then when we understand the full nature of what we have, we can make corporate decisions on the best way to advance it.
All right. Well, it sounds exciting, but every time I hear never been drilled, I always think we don't have anything yet. So exciting theories and prospects, but until we have drill holes, it's hopeful. So what I'm hearing is Gumaro is too early to drill. Oso Negro, you're ready to drill, or you need to do more surface work before you drill? And
there's one more step before we drill, but we will be drilling La Lola in February.
Okay. All right. Well, very good. So $5.5 million in the bank. The exploration budget, you have contingencies. You mentioned $4+ million. Was that just UNGA, or does that include Mexico? What is the budget for this year?
And so the budget for this year is
minimum, I guess, since you have these contingencies.
Yes, 600,000 Canadian for our Mexican projects and 4 million Canadian for our UNGA project. There's all sorts of other opportunities from there, but let's wait till we get the results. We're fully funded for what we'd like to do, at least for the first 6 months.
And in terms of results pending now, we have drill results from UNGA. Are there surface results or anything else pending from Mexico at the moment yet?
No, so the January, February into early March will be our drilling results from UNGA, and then you'll start to see results in March, April from Mexico, and then we'll have remobilised to UNGA, and from May onwards, so you're back to UNGA. So you'll see consistent news flow from us throughout the year. Very
good. All right. Well, you've been a good sport here with a bunch of questions, and it is an interesting story. You definitely have my attention. I'll be very interested to see what the truth machine turns up for you. But I have to ask. I noticed the share structure slide includes 21.7% board and management ownership, which is an impressive amount of skin in the game. But I wonder, how much of your own hard-earned cash have you put into the play?
So I own 330,000 shares. It is the vast bulk of my wealth. I put in as much as I could afford to put in. I think I've invested approximately $100,000 of cash through the financing stages of Heliostar to bring this to fruition. So, being a younger CEO, this is my focus to go forward. We covered a lot in this presentation. There's a lot of different things happening. It's quite a lot of moving pieces. So, I think we've got really high grade projects, really high potential targets, and that's why I put a lot of my money into taking these forward.
Well, I'll let you have the last word. That sounds good. Seriously, do keep us posted, and good luck with it.
No worries. Thank you very much.
Thank you for watching this edition of In the Pit with Lobo Tigre. If you enjoyed or found value in what you just saw, and you're watching this on any sort of social media, please do hit the like button and the share link. Send this on to anybody you think might be interested. That helps us out a lot. If you're watching this on YouTube, please do hit the subscribe button as well. The number of subscribers helps us get more valuable content to you as well. On the subject of subscribing, I'll quickly say that if you're not a subscriber to our free weekly Speculators Digest, I encourage you to sign up. I promise if you do, we will not send you a flood of daily advertisements. You get one free weekly digest with original research not published anywhere else. Check it out at independentspeculator.com. Thank you and have a great day.